Welcome back to Talking Papers Faceless podcast. I'm Shaquille.
And I'm Axa.
So glad to have you all back for another deep dive.
You know, we do these every Monday and Thursday.
Right. So be sure to check back in with us later this week.
We got more great stuff coming.
Today, we are going to be looking at businesses.
Yeah.
Trying to figure out how to tell the great businesses from the good ones and
And the gruesome.
a gruesome one.
Yeah, stay away from those.
Yeah. We're going to be taking our inspiration from great, good, and gruesome businesses.
Oh, this one.
It's such a catchy title.
Yeah.
Like you just know it's going to be a good one.
Yeah. And you know what I love about this source is
What's that?
it simplifies things. Like investing can be so complicated sometimes.
Oh, absolutely.
But this source breaks it down into like a framework that anyone can use, like even me.
Okay, so it's like a cheat sheet for understanding businesses.
Yeah, exactly.
I like that. And you know what else I like about it?
Right.
It divides businesses into 3 categories.
Oh, yeah, I love that part.
Great.
Good.
Gruesome.
Gruesome.
Yeah.
All right, so let's start with the good ones.
The great ones.
Oh, yeah, the great ones.
Yeah.
Those are the companies that are like money-making machines.
Yeah, they just rake it in.
But how do we even...
Like, is there a way to measure that?
Yeah, how do we measure that? Like, what makes a business great?
Well, one of the key things is they have high returns on capital.
What does that even mean?
Okay, so think of it this way. A great business is really good at using its resources
Okay.
to make a profit.
Right.
And we measure this using, like, metrics,
Uh-huh.
like return on equity.
ROE.
Yeah, ROE.
Uh-huh.
And then there's also return on capital employed, ROCE.
So a high ROE means that for every dollar you put into the business, you're getting a lot of profit back.
Exactly. It's like, you put in a little and you get a lot back.
Oh, I like the sound of that.
It's a beautiful thing.
Okay, so as an investor, why should I care about ROE?
Because higher profits means...
More money for me. Yeah. Well, more money for the company to reinvest and grow.
And then more money for me.
Yeah, exactly. Dividends, stock buybacks, all that good stuff.
All right, so it's not just about how much money a company is making.
Right.
It's how efficiently they're using the money they have.
Exactly. And you know what else great businesses tend to have?
Tell me.
Strong management teams.
Oh, that's important.
Yeah, absolutely. And a unique advantage, something that sets them apart from the competition.
Like a moat.
Yes, a moat.
I love that analogy.
It's a good word.
It's like this protective barrier
Yeah.
keeping all the competitors out.
Yeah, exactly. Like Apple, their brand is like a moat. Super strong, right?
Oh, yeah, totally. Or like Amazon
Oh, yeah.
with their low prices.
Yeah. Or think about Facebook. They have so many users.
Yeah, that's a big moat.
It's huge. It's
I
hard
know.
for anyone to compete with that. And then, of course, great businesses usually have high growth potential.
Yeah, like they're just going to keep on growing and growing.
Exactly. And that's good news for investors.
Right. Okay, what about good businesses?
Oh, yeah, those are great too.
So those aren't like the superstars.
Yeah, they're not going to like 10x your money overnight.
Right.
But they're solid,
Solid.
expandable.
Yeah, they just kind of keep chugging along.
Yeah, like think about a utility company.
Oh, yeah.
They provide electricity or water.
Right. Everyone needs that.
Exactly. People always need those services. And then there's like manufacturers
Mm-hmm.
that have a specific niche.
Okay, so they're not flashy,
No.
but they're reliable.
Yeah, they're like that dependable car.
Yeah.
It might not be a sports car.
It gets you where you need to go.
Exactly. And you know what's cool?
What?
Good businesses can actually become great businesses.
Oh, really? How did that happen?
Well, maybe they come up with a new innovation,
Mm-hmm.
or they like acquire another company that helps them grow, or maybe the market changes
Oh, interesting.
and suddenly their product or service is in high demand.
So there's hope for those good businesses?
Absolutely. You never know what the future holds.
Okay, so we've talked about the great ones.
The good ones.
Now it's time for the gruesome ones.
Dun, dun, dun.
These are the businesses we want to avoid, right?
Oh, yeah. These are the ones that can actually lose you money.
So what makes a business gruesome?
Well, for one thing, they often require a lot of capital
Okay.
to operate,
Right.
but they don't generate good returns.
So it's like throwing money down the drain.
Yeah, pretty much.
Ugh, that's scary.
Yeah. And they often have a lot of debt.
Oh, that's not good.
No. And sometimes they have poor management.
Oh, yeah. That'll sink a business.
It really can. Or maybe they're in a really competitive market.
So it's hard for them to stand out.
Yeah, there's just too much competition.
So these businesses are what we call capital destroying.
Yeah. Imagine you put your money in a company like this,
Okay.
and it consistently performs worse
Uh-huh.
than like a fixed deposit.
A fixed deposit. Those are supposed to be safe.
Exactly. But a gruesome business can actually be riskier.
So how do we avoid falling into this gruesome trap?
Well, you got to do your homework.
Research.
Yeah. Don't just buy into the hype.
Right.
Look at the company's financials.
Okay, so look at their debt levels,
Yeah.
their profitability, and are there any signs of a moat?
Exactly. Or a path to future growth.
Okay, so sometimes a gruesome business can actually turn around.
It's possible, but you have to be very careful.
Do your due diligence.
Yes.
This makes me think of something Ramdeo Agrawal said.
Oh, yeah. What's that?
He said, buy good companies at great bargain prices, or buy great companies at good, reasonable prices.
Oh, that's good advice.
What do you think he means by that?
I think he's saying that it's not enough to just find a great business.
Right.
You also have to buy it at the right price.
Like, even if a company's amazing,
Yeah.
if you overpay for it,
You're not going to get a good return.
right. It's like buying a fancy sports car,
Yeah.
but paying way more than it's worth.
Exactly. Doesn't matter how great the car is. If you overpaid, you overpaid.
Yeah. You made a bad deal.
Yeah. And it's the same with businesses.
So whether you're looking at a good business or a great business,
Make sure you're getting a good price.
yeah, shop around.
Yeah.
This has been a really insightful deep dive.
It really has.
Understanding the differences between great, good, and gruesome businesses is so important.
Absolutely. Especially if you're an investor.
So before you go out and buy any stocks,
Yeah.
ask yourself,
What kind of business is this?
is it great, good, or gruesome?
And am I getting a good price?
Yeah, don't overpay.
Don't do it.
All right, that is it for our deep dive today. If you enjoyed this episode,
Yeah.
be sure to hit that subscribe button.
And leave a comment.
Yeah, tell us what you thought.
And if you have any ideas for future deep dives,
Let us know.
yeah, we're always looking for new topics to explore.
We'll see you next time.
Bye, everyone.